Jason. Today we're here to talk about the state of fintech, and you're sort of an expert in this space. So thank you for joining us. First off, I want to congratulate you because you were recently listed in the top 100 influencers in fintech. I think was it 36, number 36 on the list. Quite an accomplishment.
You're embarrassing me. Thank you.
And that's why we have you here to be kind of our fintech guru for the day. So, for those of you on the phone, we're going to kind of talk about trends, and Jason's going to tell you all the kind of fun, hot topics and what's going on in fintech. However, before we get into that, Jason, I thought maybe you could just spend a minute or two just sort of telling the folks on the phone. We might have some prospective students that are looking into our new a master's degree program in digital innovation for fintech. Can you kind of explain how did you get interested in fintech, right? Like what kind of sparked your interest? How'd you get into it? Obviously, you're a top influencer now, and then we can kind of go into what the state of the industry is, if that works.
Perfect. Yeah, thanks, Ashley. So it's nice to be on the call with everybody today, and I'm going to try to make this an interactive answer. If you're listening and paying attention, could you type in the number of fintech products or platforms you currently use in your day-to-day life? So whether it's for payments like Venmo or Square, or it's an online bank, or you've used Lending Club or Prosper, or you've used SoFi, or perhaps you've looked at auto finance or insurance. Just curious. Okay, I'm getting threes, fives. I'll put my own answer, which is nine. I just counted before I started. So the reason I got interested in fintech is because um, there was a very clear and unique movement taking place in financial services where I started my career. And that is that the more time that I spent working with clients, the more time they were asking me about mobile platforms, about how to reach their customers in a more delightful way, and about the migration of technology to a distributed universe of apps and plugins that were much beyond the traditional walls of a bank. And so for me, it really escalated 2 years ago at PwC when one of our clients asked us a traditional consulting question of how can we evaluate the landscape of emerging threats in small business technology. And my team did a huge 6 week project, delivered like a 60-page PowerPoint deck, which is sort of the stock in trade of a consulting firm. And we were asked to come back two weeks or so later to report to the board of the company, sorry, 2 months later, and everything had changed in the marketplace. There was so much funding, so much activity that it was almost impossible for us to uh, deliver to that same board what we had produced 2 months earlier. So as an outcome, we ended up having to redo the whole project in a weekend and learning so much about what was happening and seeing how fast it changed drove us to reevaluate the way we deliver insight and consulting and to propel us to develop a platform, which I'll tell you about today, to provide that information to clients in real time. Ashley, I hope that wasn't too long of an answer.
No, that was perfect, Jason. Thanks. So, what should we know about fintech? Sort of what's the current state, and where do you think things are going?
Well, that's a great question. So what I'd actually like to do is, so the secret on the call is that Ashley and I have worked together before, and we're both connected to the fintech ecosystem in our own ways. So what I'd like to do, if I can, Ashley, is put you on the spot after I answer the question. I'll answer it from what's going on, but I'd love to hear from you if you could just sort of share why you're interested as well, because I think there I can bounce off your interests and make this conversation a bit more interactive. Would that be all right?
Yes, definitely.
Cool. So what's going on in fintech? Let me share my screen. Let me see if that can work. Just need to figure out where to press the button.
Let me stop screen sharing on my end, and then you should be able to share your screen.
Okay, let me make sure nothing crazy. Oh, gotta close one file first. Don't save that, and don't save that. If you guys saw those two files, you'd be able to put me out of business. One more second. Okay, it is telling me I need to make changes to run in unsafe mode from the pop-up menu.
Jason, if you want to send me the link, I can do a screen share on my end.
Yeah, let me do that. And I'm sorry for the participants. I didn't realize that there would be an issue. Um, Let me talk it through first. So imagine that you have the four concentric Olympic rings, or maybe there's five Olympic rings, but pretend there were four, and there was a Venn diagram with four circles overlapping. The way that we see FinTech is that each of those circles has a group of participants. The first circle are the financial service companies, so your banks, insurers, asset management companies, etc. The second group are the technology companies, Google's, Amazon's, Facebook's. The third group are what we like to call the back end or infrastructure players. Some of these are custodian banks. Some of them are payments rails and payments networks. And then the last group are the fintech startups, the disruptors. While I send this file over, I would ask you guys to just see if you can imagine that concentric circle. And we're going to talk about how each of those players are impacted by innovation in fintech. So give me 1 second to get that over to you, and we can go from there.
Yeah, and Jason, I can kind of pick it up where you left off and just talk about sort of how I got
Perfect.
interested in fintech and how that works. So, for everyone on the call, again, Jason and I go way back. We're both kind of fintech junkies now. I work for a large financial institution, and we had been interested in hearing about all of these sort of new players in the marketplace. And as Jason asked you guys in the beginning, it starts to impact your personal life where, you're using apps like Venmo or Lending Club or SoFi or what have you. So it really became interesting to me about the same time, about 2 years ago, and we started working on a project at my own company to figure out how a big financial institution could start to play in this space. And it really dovetailed from there. And now I work full time on emerging technologies in fintech for my bank in particular. And I think what's interesting is that we've seen such an evolution with technology in our lives over the last 10 or 15 years, whether it's everyone having mobile devices or how music's changed. And fintech is just another industry where you're seeing, or I should say, financial services is just another industry where you see tech kind of um, tech kind of coming in and really changing the game for a lot of incumbents. So it's worthwhile as an incumbent to sit and study and figure out how you can partner with these folks, bringing new ideas to the surface. It's a really exciting space where you can leverage the knowledge that you've had over your career in financial services and then sort of learn about all of this new technology, or vice versa. If you're in tech but you've sort of always had an interest in the financial space, it's an opportunity to kind of marry those two things together. And there are a lot of industries that are sort of coming about like this, whether it's insurance tech or regulation tech or healthcare tech or things like that. So that's why I'm interested in it. I just think it's just the future of how we all interact, whether it be the global economy or healthcare. Everyone sort of has to be aware of what these new apps are and what's going on and what the trends are and where things are going. And I just find it intellectually stimulating and curious. And that's why Jason and I kind of nerd out about these things from time to time.
Definitely lots of nerding out. So I've sent it over to you, Lindsay. You should probably get the email shortly. I want to talk through this concentric circle idea a bit more because it'll give you a view of how we see the fintech landscape and how we think it can impact folks such as that I've had in the past, such as Ashley, or that it can impact people in their day-to-day lives. So I really appreciate your patience. Lindsay, let me know if you got that email.
I did. I'm just clicking on the first
The image
link
that I
now.
attached. Okay, I'd rather have
Yes.
you start with the attached image.
Sorry, just a second. Just having a technical difficulty here. Just a
That's
moment.
fine. So for the folks that are on the line, when you think about fintech, you probably think mostly about the consumer-facing companies. So in wealth management, you've probably heard of either Robinhood or Wealthfront or Personal Capital or Future Advisor. In payments, you might have heard of Dwolla or TransferWise. In banking, you might have heard of online banks like Movin or Simple. In um, insurance, there's all kinds of companies. One of the best known right now is the host of companies that help you pay for your miles driven on your car insurance versus paying for an overall monthly premium. So, like Metro Mile. There are a host of companies that are aimed directly at you as consumers. But what I want to walk you through is the idea that that's not even where the real opportunity lies. It's where there is a somewhat sexy focus of attention in the marketplace. But what I'm going to sort of talk about, if I may, is what fintech innovation means for each of these players, and then how that is impacting financial services and how it impacts the jobs market and how it impacts the way that we will interact with financial services the rest of our lives. The truth is that for banks, for startups, for folks like me who work with both banks and startups, there's a lot more money to be made helping large global financial service companies innovate, update their offerings, and work on what you'd call enterprise solutions than there is by offering new consumer products. But those new enterprise solutions drive and accelerate the pace of change for consumers. So you might say, well, what's an example of that? Really simply, think about all of the different accounts that a bank has, how a bank has a general ledger, and it tracks every time every client either adds or takes out money, makes a payment, deposits a mortgage payment, et cetera, et cetera. There are fintech companies that you've never heard of, that I've barely heard of until I got in the business, that spend their entire life helping clean up the back end of a bank ledger. And that's about as far from a sexy consumer fintech product as you can get. And it's probably a more valuable business with a greater impact for financial service clients around the world. So that's the side of fintech you don't hear too much about. And what I'm going to talk through now is that concentric circles diagram and show you where the back end and the front end of fintech come together and what it means for what we'll call the incumbents in the space. By the way, if there are any questions, please just flag them in the chat box as I'm going. So, like I mentioned, if you think about these four circles with fintech making up the entire ecosystem, the first are the financial institutions. They're in the best position to leverage platforms built by fintech companies and to enter new markets by partnering for new products or acquiring them outright. Those are the A's. The B's, as I was saying, are the large tech players, the Googles, Apples, Amazons, Facebooks. These companies in the US are prohibited from offering pure financial products. You might say, what about Apple Pay? What about Facebook Pay? They can partner with payments providers, but you can't get a Facebook bank account. You don't have an Amazon bank account. And believe me, it's not because they don't want to be your bank. It's because federal law prohibits them. In other markets, in China, for example, regulators have been very much focused on providing new options and liberalizing the market so that, in fact, Ant Financial, Tencent, and others in China can offer bank accounts as tech companies. The D's, or excuse me, the C's are the infrastructure players. These are the folks that we think actually are at most risk because the example I just gave about a banking ledger, how a bank keeps track of its accounts, is absolutely fundamentally challenged by fintech startups. And that's where these large infrastructure players have had 30 to 40-year relationships with the big banks with technology that evolves, but it doesn't evolve quickly, better, and cheaper than what's in the marketplace now. And then lastly are the D's. Those are the disruptors and the innovators. Um, you'll see here that we're saying disruptors and innovators are moving from B2C to B2B models. Those two terms are pretty common, but it illustrates the reason for it. That was what I was saying earlier. There is a ton of publicity in building a direct-to-consumer fintech platform. There's not a ton of money in it for most companies. Um, if anybody on this call happens to use robo-advisors, could you guys just type in the box if you use one? So some of those are Wealthfront, Hedgebull, Motif, Betterment. Anyone use robo-advice? I'll give you guys a second. Okay, so those companies have been in the news a lot, and they help you invest your money better, whether you're saving to buy a house or for retirement. Now, the reason that I bring those up is that there were a couple of acquisitions that were made where huge amounts of money were paid for these products or these platforms. And in fact, none of them had very many customers, and their cost of acquiring those customers was very high. So why are people buying them and who's buying them? Well, if you look at this map, the D's are often acquired by the A's. And the reason they're acquired by the A's is to cut out the C's and provide the customers of the A's better products that keep them away from the B's. So it's really an ecosystem where there's a lot of movement, a lot of competition, a lot of jockeying for position. And the thing to be aware of here is that as these companies jockey for position, there is one benefit to the consumers, and that is better products with better interfaces and UIs are going to be coming to the market that you can use in your daily lives. Now, one more point here. When you think about fintech and you think about banks, I'm curious, you gave me the numbers of bank accounts that you have, or of fintech products. How many different bank accounts do you guys have? Do you have checking and savings? Do you have multiple checking accounts? If you guys could maybe share how many banking accounts. Okay, checking and savings, checking and savings. For those of you that are checking and savings folks, have you started with one bank when you were in high school maybe and stayed with them, or have you switched? So for me, I'm 31. I'm on my fifth or sixth bank. Okay, most people have stayed, some people have switched. When I was in college, I came from Arizona to Boston, actually, to Northeastern. Ashley and I are both Huskies, though I have taken the Brandeis shuttle quite a few weekends when I was an undergrad. Um, I switched from a bank that no longer exists in Arizona to, at the time, Fleet Bank in Boston, which became Bank of America. But all these banks that you've passed money through now really want to hold on to you as customers forever. There's an expression for people like yourselves, people finishing college programs or advanced degrees, which is called a Henry, which is a high earner who is not rich yet. It's people that are maybe finishing education, starting their careers, and they are projecting to be high earners, but not rich yet. And a bank is fighting today to make sure that it keeps you through that journey and that it offers you products at each stage of your life through that journey. Just like if you have credit cards, there might be one credit card that you want to use all the time. And there are other credit cards that you might use on occasion, like for travel, for gas, for groceries. Now, the bank views you the same way. They know you have 3 to 5 fintech products, but what they want to do is give you a product for every stage of your life on their platform so that instead of being like a credit card that's at the top of your wallet, they want to be on the home screen of your iPhone. They don't want you to go to the third screen in the second folder to find them. Your bank now wants to be able to say, we are going to power your life from start to finish with financial products. And they hire people like us at PwC to help form partnerships between the A's and the D's on this page so that Whether you're in college and you need extra money for spring break, or you want to keep the change on your purchases, or you want to start investing but you don't know how, there's a product there for you. When you graduate and you have your first couple jobs and you've saved enough money for a down payment on a house or a car, they want to provide you with that loan. They want to help nurture your retirement and help you put away money when you have kids and your kids are saving for college. So the biggest battle that's being fought right now is for people like you who are starting their journeys, and the battle is being fought on the battlefield of keeping the client within the bank. So when you have 4 or 5 banks, your banks also recognize that you have more than one place you're keeping your money. And the reason you're getting offers, whether it's a credit card offer or a loan offer, and by the way, please don't sign up for every credit card offer you're given. You'll come to regret it, I promise. Um, as you go through this journey, one of those 5 banks is going to be your primary relationship if you have more than one bank. But they don't know yet, and you don't know yet who that's going to be. And I'll tell you what, they don't stop fighting for you. I got an offer last week when I signed in to pay a credit card from a bank that was offering me $500 to become a client of their with a checking account if I kept a minimum balance of $10,000. So they're going to give me, uh, 5% of the total value I have to give them in order to win my business. That's a pretty great deal. So the battle continues, but it's really being fought over who will be that top button on your home screen that powers your financial life. So I'm going to pause there for questions and see if Ashley wants to add anything.
I think that was a great overall description, Jason. So do you see this as and I'll be the first one to sort of throw you a question. Do you see this as more of a US focused issue, or are there different issues with fintech globally?
Well, I think that's a great question. Globally, there are themes that these companies share across the world from the banking perspective. Um, I spent about a month and a half in Europe earlier this year meeting with clients across the continent, large banks in the UK, France, the Netherlands, small banks across Germany and Italy. And they're kind of all sharing this vision that in order to survive, they have to attract you as a customer all the time to be first on your mind when you think of finance and to provide you with a great experience. The difference with the US and other markets, so I used Europe as an example here, is that in Europe, there are a few more regulations that prevent some of the innovative fintech companies from easily partnering with the banks. So the banks there have to be even more creative about what they're going to offer you to try to get you to become their customer. On the other hand, if you look at China, uh, China has put forward a regulatory policy that's almost entirely focused on um, making it easier for new financial products to come to market. And what's happening there is that there's a huge issue of fraud. So one area we haven't talked a lot about is marketplace lending. It used to be called peer-to-peer lending, but it's really a marketplace. And in marketplace lending, in its original form, you might give $5,000 to a company. They lend out that money to someone else, and they pay you a guaranteed return. In China, there's so much fraud that takes place in those businesses that almost 30% of the companies that have been established are currently under investigation or criminal prosecution for defrauding their investors. So there's a term called runaways in China, that they're going to take your money and run away. So right now, the battle that Chinese fintech companies are facing is convincing their customers they're trustworthy and finding ways to get to new customers that aren't already skeptical about what they have to offer.
That makes a lot of sense. And I know that there are a bunch of sort of global hubs of fintech, right? You hear a lot about Israel, you hear about a lot about London, you hear a lot about New York and Silicon Valley, obviously. Um, how do
hmm
you think, just to take, to keep on the global theme, do you think like big events like the Brexit sort of help the fintech community, or do you think it becomes a restriction on them? So of course, like London is a big fintech
Yeah.
hub. They've got level 39. They've got all this funding. They've got regulatory support. And then all of a sudden, this huge global event like Brexit happens. What does that do to like an emerging industry like fintech?
That's a really good question. So right now, for those who don't know, Level 39 is a fintech accelerator where early stage companies get mentorship and funding from financial service firms in the UK. I was actually with some folks who are going to be in Level 39's next class of startups. Hasn't been announced yet. Last night here in San Francisco. The answer to the question is it's too early to tell. So the global fintech hubs are widely agreed as being here in Silicon Valley, in New York, in London, Singapore, and Israel. Now, London has the most number of companies that are pure fintech. New York had the highest level of fintech related venture capital investment last year, but Silicon Valley has the most successful track record in the world of fostering innovation. And so there's a constant push and pull between whose city's fintech scene is better, which is something that my friends and I, who are nerds about this, fight about constantly. I think the Brexit will not shift power from London to other European cities because there are too many venture capitalists in London. There are too many folks who worked in the city of London, which is their version of Wall Street, um, that have long expertise and knowledge of financial services for the fintech startups to leave. However, I do think that some of the larger banks and other financial institutions that we work with certainly are considering their options, but they're also waiting for the dust to settle a bit. One of the interesting things you'll find in Europe is that there are actually fintech hubs sorted by specialization geographically. So in Ireland, there are a bunch of payment startups in Dublin. In Scandinavia, there are, for some reason, a lot of core banking platforms and lending platforms. In Italy, there's a bunch of customer experience related banking software being developed. In Germany, there are some investment platforms. And there are more companies across the spectrum, but there are these miniature concentrations uh, of companies that share similar missions and goals. That's kind of fascinating to observe. I do think, though, that as time goes on, there's one other thing to note that I've seen, which is that in Silicon Valley, fintech companies are mostly technology entrepreneurs that are looking to be involved in financial services. In New York, it's mostly financial services professionals looking to be involved in technology. And so the contrast when you talk to folks from each market is fairly significant. And you can really see the difference in how the vision of the companies for the startups was born, how their growth goals are pegged, and who they're trying to serve. In New York, there are a ton of startups focused on serving massive institutional investment firms. There are very few startups doing that in San Francisco. In San Francisco, there are a ton of fintech startups focused on serving the technology employee, the technology community. There are very few in New York. So those are kind of the biggest geo differences that I see, Ashley.
Thanks, Jason. That was helpful. Um, any questions in the chat box before I pepper Jason with more questions?
Yeah, I'd love to get folks that have any questions. There's nothing too silly to ask. And then also, I don't know if it'll work, but I'm gonna ask uh, Lindsay to pull up the first link that I sent, which is to the PwC De Novo website. And what I want to show you guys is a video that we're used about the product we built to help our clients figure out what's going on. Okay, looks like we've got a couple of questions.
And I'll pull up that link as you're taking questions.
Okay. Peter, as a business taking web payments, my options are often tied to the platform provider. Is FinTech going to give me more options? Yes. So I'm not certain the details of your business, and it would probably be helpful to know. But generally speaking, um, you can set up payments portals using third-party online payments vendors and tag them into your existing web business. I'm not sure on the coding side how that's done, but I know it's done pretty frequently. A couple interesting payments portals you might look at would be obviously Square. I'd look at Dwolla. You might check out what Stripe's offering from an API perspective, and see if any of those would fit for you. Hope that helps. Grace 2. Geotrends are interesting. Can you elaborate on others? London, for example. Um, yeah, so in London, it's mostly, again, folks from financial services. Um, there's definitely you're much more likely to see folks wearing a suit and tie at a FinTech event in London than I think any other city. Um, so it's coming out of the straight finance field. However, it has been a magnet for European talent. Um, and Dublin is trying to steal some of the thunder there because they have much more lax immigration laws and incentives for starting businesses. So London's incredibly expensive. It's got a great, robust innovation community, but folks that might be more bootstrapping or looking for a bit of an alternative play are going to Dublin quite frequently. It looks like Brian and Elle are typing. I switched from a traditional bank to credit union in part because of additional platforms such as check deposit app. Brian, really good question comparing credit unions and banks. Um, we actually just hosted the second largest credit union in the country here in San Francisco for what we call an innovation workshop. They were looking to figure out for small businesses what they could do to offer better products to members who happen to be small business people. A really interesting stat is that at most banks that offer small business solutions, they typically don't even know which of their clients are small businesses because the clients just use their traditional checking accounts to power their small business. It's a huge issue that startups like SizeUp, SIZEUP, are going after when it comes to the business side. When it comes to the retail or consumer side, it's a little bit different. So credit unions are oftentimes able to get technology from the whiteboard into their product faster than large banks because there's not as much red tape and bureaucracy. Um, However, they tend to have smaller research budgets so that they're not able to do the most advanced and innovative things. Um, Credit unions are actively talking to see if someone like us would be able, as PwC, would be able to pull together a whole host of startups that can build a series or a suite of solutions with like almost a shared resourcing structure because the credit unions don't compete head to head in most markets, so they don't have to worry about cannibalization. So imagine if 10 credit unions from across the country got together and invested in three top priority items that could then be deployed back to their customers. I think that's what you're going to see moving forward from an innovation standpoint there. Is anyone else on the call a credit union customer? Just out of curiosity. Um, Brian, you're welcome. L, why would a large financial institution opt for getting services from a startup? Aha. Well, I'm going to put Ashley on the spot and I'm going to have her talk to that point, if you don't mind, Ashley. Why would a large financial institution opt for getting services from a startup instead of creating your own?
Yeah, no, it's a great question, and it's something that, we think about all the time. I think with any type of either new technology or new business opportunity, there's sort of three ways you can think about it. You can either buy what you want from another provider, whether it be a startup or another vendor. You can partner with someone, or you can build your own. So I think it depends on sort of what the state of that product is, what the state of the market is, how fast you want to get to market, how easy it is to scale. So a lot of those things have to do with just basic business decisions. I think when it comes to some of these more kind of cooler fintech products, like the robo advisor market, for example, you've seen in the last 2 years a lot of big financial institutions look to buy these startups or partner with them. So I think Northwestern Mutual bought LearnVest. Fidelity had an agreement with Betterment before they just launched their own robo advisor. Wells Fargo has now just stated that they're going to actually build their own robo advisor. So I think it just depends on sort of what the company's structure is, what they're trying to do, and how fast they want to get there. And quite frankly, some of these startups are early on very cheap. The technology is already there. They've already built it, and they can get them for a good price. Once you get into these companies having more success, they become very expensive. I think BlackRock spent quite a lot of money buying Future Advisor a couple months ago, which is a robo. So in terms of looking into that market, if I'm a large financial institution, I want to see what all of my options are. And if there is a startup that, is quick and fast and has a product ready to go, why wouldn't I go for that? Instead of sort of taking months and months trying to figure out what they did, what the secret sauce is. I want to partner with them, or I want to scoop them up, or I want to have some type of relationship with that startup. I think too, there's a lot of there's something to be said for like outside in thinking and bringing in innovations from outside. So sometimes it's not so great to do things all in your own or all in your own company. That's why there are tons of acquisitions or partnerships or vendor agreements, because sometimes you don't build the best mousetrap. And that's kind of the best answer I can give. It depends on sort of your business needs and where you are. But my answer would be like, why not? It's a great opportunity if something's already built to just snatch
Yeah.
it up and go.
Well, and there's can I add one thing to that or a couple things?
Sure.
Um, I think that the other thing to keep in mind that is that you know most large financial service institutions have a bunch of competing interests internally. And so it's very hard for a large FI to get the right team involved to build the right product for the right audience with the right group of stakeholders up the ladder supporting that move. It's often easier for the leader of a business unit to say, hey guys, I know that we want a robo advice capability, and I know that we're not going to invest $10 million to see if we can build one. But company X has offered us a pilot for $150,000 for 6 weeks with a subset of our biggest customers. What do you think about trying that out? And that's a lot easier for that business unit leader to take a risk and bring an idea to management, because the other sort of dirty secret is that most people at corporates are not very interested in failing. And failing is a huge part of starting a successful technology startup. So if they can use technology that's already been built, it might take 2 or 3 different pilots or prototypes to find the right solution. But that's a lot cheaper and a lot faster and less messy failure rate than building it yourself, becoming married to an idea, than having to run away from it. So don't underestimate the emotional intelligence and behavioral economic factor as well. Would you agree, Ashley?
Yeah, no, I would agree. And I think speed is the last thing I
Yeah,
would add to that. Like you
yeah,
said, if you
great
can
point.
just do it quickly and get it done, do it quickly and get it done if that's in your best strategic interest. If you
Yeah,
want to take the time, as Jason said, to build the team, get the right people, get the stakeholders, and you feel like you can afford that in the marketplace wherever you are in the life cycle of that particular product or service, those are the decisions you have to make.
yeah. And one last point there. You know, it's it's really hard to build things from scratch but it's really easy to learn from somebody who's done it very well and then copy them. And you're seeing that happening not only from the startup side, but from the institution side with Fidelity ending its agreement with Betterment and building its own robo-advisor. So they're essentially saying, hey, we liked your mousetrap. Guess what? We actually can build a better one. And time will tell if that's correct. I've got another question from Aniruddha. Infosecurity is the biggest trend. Is there a compliance? Whoops, sorry, I had a pop-up. When it comes to employing related security services, is there a compliance requirement to be considered viable? Interesting. So is there a compliance requirement? There are various requirements for startups across a whole spectrum of compliance topics, depending on which area they play in and who they're trying to sell to. So let me give you a real life example. One of the things that we do at PwC is we actually form formal partnerships with startups to work on their solution together and take that solution to our clients. It's called the At Scale program. The idea is that our clients, to the point we just made, do not have the bandwidth, the budget, or the interest in building a solution from scratch. The startups will have their valuation or their multiple decrease for every X number of new headcount they employ to deliver implementations and professional services, because that's not what makes startups valuable. And our clients trust us to do implementation and delivery work. But before we can take a startup to our client and say, hey, Ashley, we've got this amazing anti-money laundering and know your customer platform, we have to do a lot of homework. So we'll do all the due diligence, technical, legal, and commercial, that would go into an investment round or an acquisition, but not for the sake of making an investment or acquiring the startup, but for the sake of being able to say to our clients who trust us, hey, we've done our homework. This isn't the right fit for everybody, but for the problem you're trying to solve, this company has our blessing from the perspective of being fundamentally sound. You can take this chance to do a proof of concept or pilot, and we're there to help. On the data side, two ways to skin the cat. One of the hottest areas in the fintech world right now is all around authentication. So we started with authentication being something you know, a password. Then it was who you are, a fingerprint, your eye, or a voice command. It's moving quickly into how you behave. So there are authentication tools that will look at how you touch your phone over the course of 2 or 3 weeks, and then can detect if it's really you using the phone to authenticate you into a financial platform. The data requirements for those are evolving. It's an area of concern. And as you've seen recently in some of the Bitcoin wallets, it's an area where there needs to be more attention paid. Let me see the additional questions.
And Jason, just for a time limit, that's probably
Yeah.
You can probably answer Peter's question and then show the platform real quick, and then we probably have
Cool.
to wrap up.
Cool. Perfect. What is the appropriate role for U.S. banking and financial regulators? Well, most of my clients would say that the less onerous the role, the better, when it comes to the regulators. I think that's right, but I think it is important to protect consumers. In marketplace lending particularly, there are some folks that are, you know, taking on more debt than perhaps they should have. There are some lenders that are willing to give folks loans that they probably shouldn't be approved for, and that's reminding people very much of the housing crisis. And it's reminding people very much of what happened after the housing crisis, sort of the bubble burst. And so the appropriate role from our perspective is to take a measured approach to letting the market advance itself technologically, to letting new platforms and offerings come to light, but also to look out for the consumer to the extent that they aren't defrauded, they aren't being provided an opportunity to take on more than they can handle in a predatory way. and that if that happens, there's some recourse. I know that that's not a super direct answer, but it's the most I can probably say in a forum like this. Ashley, do you want to add to that?
No, I think you covered it really well, and I think the regulators have taken notice of how much change
Yeah,
is going on in the financial services
absolutely.
landscape. You see, the US Fed starting a working group to discuss more secure and faster payments with regard to like
Right.
Bitcoin and blockchain, which is just, I mean, it's just unheard of as in terms of like regulators being this, I think, up to speed on, oh, wow, there's a lot of
That's
change
right.
going on. We better get on this. And as you put, Jason, I think protecting the consumer is really paramount when you think about how much now access people have to whether it be the robo advisors, more sort of sophisticated investment vehicles or marketplace lending. You really have to make sure that even though it's an app and you think it's really simple to use, you might be taking on more risk than you think by not actually talking with a registered advisor, quote unquote, or someone, an expert, quote unquote. So, with that said, I think we have about 4 minutes left. Jason, why don't we do this? Why don't we send the external links out to this group just so
Perfect.
they have
That'd be
them?
great.
So, Lindsay, we can
Yeah,
do
we don't
that.
have to show
Not
that. Yeah,
sure.
we don't have to yeah, we don't have to show the video. What I was going to show is a quick video you can watch on your own. This is actually, just this first link would be fine. This is our de novo homepage. If you scroll down, Lindsay, what people will see is this is sort of our solution to understanding the market of fintech and how it affects our customers. So if you scroll down, or our clients, you'll see this first video about what de novo does, which is great. And we'll talk to you about why we think that we're better than the other. Stop real quick. Go up. You passed the going to stop you at. There's a little box in the center, right above that, right there. So research and insights. On the research and insights piece, we just released a 48-page Q2 report about fintech, what's happening globally, and we focused on an area that I would have loved to cover today, which is the underbanked and the unbanked. These are the folks that um, don't have access to the right financial products that can help them power their lives. It's an area that I'm passionate about, and I think that the Q2 report, which is right below that video in the research and insight section, is a great place to start. That's what it looks like. It's a good read. It's actually a pretty easy read, so don't be intimidated by its length. Lastly, um, if you have questions about fintech and you want to reach out to me, I have a very public Twitter and LinkedIn presence. I'm on Twitter at jzaler, Jzaler. You can find me on LinkedIn, Jason Zaler. I'd love to connect further and hope that I've answered some questions today. Back to you, Ashley or Lindsay.
Yeah, one more question for you, Jason, really quickly. What are some just quick sources that people can kind of go to get the latest fintech news? Like, what are you reading, or a podcast, or like where can people find the latest and greatest info?
That's a great question. I sure do read a lot of stuff. I think that quite candidly, the best way to follow fintech as it's developing is through Twitter. There are numerous lists of Twitter influencers, fintech Twitter lists. Um, and if you follow some of the thought leaders there, you'll start to figure out which additional news sources to follow. So I use that every day as like a streaming news ticker of what's happening, and it enables my team to push out to the rest of the firm globally news or relevant fintech information in real time. If you're
Great,
more of
thanks
a
for that.
traditionalist, the American Banker is a great place to start, as is FinTech North America. They both have websites. You can just Google them.
Awesome, thanks for that. So I'm just gonna kick it to Lindsay to just kind of close off here.
Yep, absolutely. Thank you so much, Jason and Ashley, for presenting to us today. We were really excited to have you. And you all should be able to see in the chat box, I included a couple of links that we were going to show that we just didn't have enough time to fully go over. And these links will also be sent out via email, and we'll try to see if we can get them up on our site with a link to today's webinar recording. So, just to kind of wrap up, Graduate Professional Studies is really excited to announce that we'll be offering an MS in Digital Innovation for FinTech beginning this fall. So, this program, like our other 10 programs, it's part-time and fully online. The classes are taught by experienced industry practitioners, and we're especially excited that Ashley is our chair for this new program as well. So registration for the fall term begins on August 23rd. If you have any questions, feel free to reach out to us. Our number is 781-736-8787. You can also send us an email, gps@brandeis.edu. Our really good enrollment team can show you how to register for a class, and students can take up to 2 classes before applying to the program. You'll see that listed on the screen here are 3 of the programs that are going to be offered. And on this screen here, you'll see our contact information. Make sure to connect with us through social media and to subscribe to our blog just to stay up to date on special events like today's webinar. We do job posting spotlights from time to time, and we also offer networking opportunities. We're excited that our next networking event is on October 20th at the Faculty Club here on the Brandeis campus. So if you're able to make it, we encourage you to come and connect with our staff and other members of the Brandeis GPS community. We'll have the RSVP link on our event page soon, so just make sure to check back once it gets to a little bit closer. Again, that date is August 20th. And as I said before, a recording of this webinar will be made available. It'll be sent via email to everyone in the room today, and then it'll also be made available on our community section on our site just within the next couple of days. Thank you so much, Ashley and Jason, for presenting today, and thank you so much for attending our webinar this afternoon to all the attendees. Thank you.
Thank you.